Good evening, Nick Inman from VolumeProfileTrader.com on Tuesday, July 17th. And looking at the S&P here, we're continuing to drift off of June's high volume area. So let me zoom in, look at June, and you see the high volume area that we have formed from June and how it has been support, and we have continue to rise to the upside slowly but surely. This high volume area that has formed, or that was formed and just became more defined, today was a pretty big reversal. Great trade to the downside until it reversed, and once it got up to 1350, my account was still net short, and it got to the point where I figured I have to do something, because if this continues to rise, I'm putting myself in a position where I'm going to be losing money, basically, and I'd rather at least be breaking even. So looking at that and realizing, there's still potential for this to continue higher. We're at resistance here. If you're looking at it on the hourly chart, which gives you a better picture of the profile for this month, we are at value area high for the month, and we could see a little bit of rejection. But up at this high volume area here, that's your target. If you're a buyer, you want to see it get up to those levels, because that shows relative strength. It shows that it can go from the bottom, or I should say make new lows for the month, and then basically retest the highs. That shows strength, and that's what you want to be a part of. So luckily for the last week or so, this trade off of the lows ended up being a really solid trade, and I tweeted it out, so hopefully you saw it. Maybe put some names on your radar, bought them, and have enjoyed this ride up. However, I'm net long, but just barely, and it can change pretty quick. So my only net short position, actually I have two, and one you're going to kind of laugh at, but it hasn't gone against me as bad as I thought it would, so I've just kind of held on to it as a just in case, and my portfolio continues to move higher. Not necessarily the pace I want, but it's going at a pace in which is satisfying enough for me to continue to hold that position. But I'm not going to tell you what it is. I'm just going to show you what I am short. I'm short the Qs. The reason why is because they've been showing relative weakness. The only reversal, the only bit of real strength we got was today on the reversal. The light volume day that we saw on Friday, that wasn't too much. We just barely made new highs off of that. So you want to keep an eye on it, and I'm keeping an eye on it. I don't want it. I mean, it's a small loser, but it could turn into a decent size loser if this thing continues up another dollar or so, and I don't want that to happen. So I'm going to be keeping my eye on that, and I may get squeezed out of this position, but I'm net long, so I'm okay with that. It was just a hedge, just in case we see some type of rollover, which, I mean, could still happen. I don't necessarily think it will. I think there's an opportunity for the upside here, but I need to be prepared, because that's what risk managers do. On the opposite side, I'm long some SPY. This is showing some relative strength. So far, we've bounced off of the point of control for the year, and we continue to drift off of those levels. And as far as I'm concerned, this thing can keep drifting like we saw here, and I don't want to miss the boat if that's the case. Therefore, I'm doing a little bit of buying down here. I still have a cost basis. I think it's around 134.50. It's probably right around there. I remember buying right at the lows, sold into Friday strength, rebought some of that position, and now enjoying a continuation to the upside. So I'm just kind of keeping an eye on that. One name that I bought today, Apache, and you can kind of see why. I think it's kind of obvious. Let's show it on the hourly chart. Shows a better picture. All right, so what you basically have is a huge high volume area for 3 months in a row, from 83.62 down to about 81.78 or so. And price, let's put it this way, every time price dipped below that level, it was right to be a buyer. And then all of a sudden, we get a higher low 2 times at the bottom of this extreme. Look at the buying volume that's coming in. Look at what we're seeing off of these lows. I bought 84.33s, I believe, is my cost basis. And then it continued to move higher. So that was good news. I really, I'm looking at this high volume area right here. Maybe even pushes up towards 86.23. Value area high for the month, 87. Those are numbers that I'm looking at. But at the same time, I want to see if this thing can get going. I want to give it enough room. So what I'm going to do is I'm going to use this trailing stop. You can see it's right here, and it's just the average true range. And I'm looking to trail my stop like that. And it's almost, the stop is at 83.19. So all of a sudden, I have less of 1% risk in this trade. And, the upside looks good. Look at the buying volume, and that's what I want to see. All right, let's show you my one short that kind of looks hideous, but at the same time, it's whatever for right now. So I shorted, and what's frustrating is I kind of jumped the gun. I didn't necessarily want to be. I wanted to protect myself, and I was looking at names that could potentially underperform. And I guess oil came across my list at the time, and this was on Monday, yesterday. And I bought puts basically at the low of this bar right here. You can see volume was lousy, but it was the top of the range, and I figured, maybe if the market does correct, if Friday was just nothing but a short squeeze, and we have some correction to do just in general, oil's volatile enough right now to where you'll probably see some type of reversion back down to this point of control level, some type of support down here, where then you could see, further buying, but the chances of some type of reversal, were somewhat likely. Well, that didn't work. We rallied into the close. I held on to it because it really wasn't affecting me. Open today, it was fine. Got to a break even today. Thought about taking the position off. Left it on. Obviously that was a bad decision. But I'm willing to hold on to this for a little bit longer. We're up at the value area low for the month of May. New contracts coming, and I am long USO puts. So hopefully that shows relative underperformance to oil. So if oil takes a breather, USO should have a slight downward bias. So that could put me in a position to maybe profit, but it's not, it's a little bit frustrating, let's put it that way. All right, ConocoPhillips, another name I'm long. I have to say, this is pretty light volume here, but the last few days have been nice. And as long as we continue to rise, we get above these highs here, we should run a little bit, at least to about 57.5, which is, on the daily chart, it's the point of control for the month of April. That should be a pretty decent target. But this is running, and it's out, and it's performing nicely, and it's really what it's doing is counterbalancing my short, or I should say my long put USO position. Apple, I have a small position in this, nothing major, nothing that is going to influence my account one way or the other. I'm probably just going to ride like this into earnings. Really small position, base position. If it soars $40, I'll be happy. Not a huge win, but a win that I could be a part of. And if it sells off, it's probably good enough for a buying opportunity. So it's just something I'm watching. It's kind of gone into a funk since it met up with this high volume area back in April. You can see we got into that. We overshot on both sides, but it was a pretty good job of holding in the extremes. So really, I guess the last thing, gold started to sell off pretty hard off Bernanke. I continue to watch this, just keeping an eye on it, and I actually increased my hedge against gold, which is right around a break even right about now. So it's doing its job, which is protecting me at current price levels. But gold had a pretty good reversal today. If we break out above these levels, I will surely scale down from my hedge, look to re-hedge around these, basically above 1600, the high volume area up here. I'll look to re-hedge somewhere around there just to protect myself, and if it keeps going, it keeps going. I'm okay with that. But we're at the point of control for the last 3 months, so we should be ripe for some type of move. One other thing, we are within last month's price action. Here's last month's highs. Here are this month's highs. Here, let me delete this. All right, last month's lows right here. Actually, it's a little bit further, but close enough. This month's lows, last month's highs, this month's highs. So maybe what you could do is connect the dots. All of a sudden you have a little bit of resistance here. And let's see if I can get this close enough. You got some support here. If we stay under this high volume area here, I'm going to add to my hedge, and it's going to become a short gold position. Not saying that it'll last, not saying it'll work, but I need to manage my risk. And if this high volume area holds down price, then I need to act appropriately, which is to be short of gold and have a short position bigger than my long position. So anyways, that's it. Hope this helps. Talk to you later. Have a good night.